What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and hit the notification bell. That way you're notified whenever we release new videos. We do release videos every night throughout the week and once on the weekend, but we also release bonus content from time to time, so having that notification button hit will get you notified whenever we do release that new bonus content. Make sure you're following us on X at Bullish Chips, where you can get real-time updates about our entries and exits for not only scalps and day trades, but long and midterm trades as well. We also offer further commentary throughout the day about the market and anything that we think might help traders be more successful throughout the day. Just a reminder, we're not financial advisors. We do not offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day, but in the past, as well as where we think price action is going to take us in the future based off of our trading and charting method. So without further ado, let's get into the charts. That's what everybody's here for. If you're new to the channel, our trading and charting strategy is based off of the strat. If you're not familiar with the strat, there's a free PDF in the description of this video. It's a very simple trading method to learn. There's about 6 reversal patterns and a couple of continuation patterns, and it's based off of the theory that a candle can be one of only 3 things: a 1, a 2, a 3, or a 3. So that's an inside candle, an outside candle to one side, either the upside or the downside, or a 3, which is basically an engulfing candle. So based off those 3 numbers of what a candle can be and these simple reversal patterns, it's a very easy method to follow, and it provides very precise entries and exits for your trades. So if you're not familiar with it, stick with us in this video. It's simple enough that you will probably have a good handle of it by the end of this video. I've also included a link to Rob Smith's YouTube page. Rob Smith, rest in peace, no longer with us, but he is the inventor of this strat, and he has plenty of videos out there. There's also plenty of information about Rob on the internet. So, after you watch this video, if you're still interested in the strat, take a look at the PDF I provided, as well as Rob's videos, and do a little bit of research on Rob, and give the strat a shot as well. I think by the end of this video, you'll see that it does have its advantages and is very simple to learn. So I wouldn't doubt that it's something you want to dive deeper in after this video. So anyways, back to the charts. We're looking at the day chart, and today we had a inverted hammer. And it was red, not just like a green inverted hammer, but a red inverted hammer. So we closed below where price opened. Price opened at 26.03 today, so that's the opening print not only for the day but for the week. So we've gone ahead and labeled it the week's opening print with our color coding methodology. Again, if you're not familiar with this, we have links to a couple of short videos in our description of this video to show you how we can dive deeper into the how our charts are set up for precision trading, and knowing where the week opens, the month opens, the quarter opens, and the year opens. Those are all very important parts of the trading methodology, and you'll see how they play a big part in price action as well. So go ahead and check those videos out at the end of this video as well if you're interested in that, because these different colors do have specific meanings, and you'll see how they're quite accurate. So we're dealing still with this monthly downtrend line, which is the dashed green line here. We haven't totally defeated it. We've got above it a couple of times, pulled back below, got above, pulled back below. So that's still definitely in play. We have the year flip, which again, this is where price opened this year. You can see it's been a rejection point on 5 different days. The quarter flip has been support a number of times as well. We do have a couple of gaps to the downside. When we did have a bigger flush outside of this range, which is the quarter flip and the year flip, 24 and 28 essentially, it did come down to this gap. And as we pointed out before, before the attempt to close the gap was put in that day, the days leading up to that, we did warn that the top of the gap could be a bounce point. I don't want to say 50% of the time it is a bounce point, but more often than not, you'll see gaps not get filled and it actually just bounce off the top of, or off the bottom of the gap, depending on where price is coming from. So we did get the bounce off of the top of the gap. Now it's just an initial bounce. We haven't gone and made a higher high on the week chart. So while we are making higher highs on the day, the week we're still an inside week, or I'm sorry, we had an inside week last week. Let's pull up the week chart. Come on, thinkers, want to work for me here. Okay, so we had an inside week last week, and we went to up immediately today. So let's go ahead and come on now. All right. So we had the inside week last week. That's this one, the green one. It was a hammer, so we did expect more upward movement today, or not just today, but this week, as we said in the weekend video, as well as towards the end of the week last week. But it did reject and come back into inside of last week's price action. So that's definitely a more bearish signal with the inverted hammer. It does play into what is known in the strat world as it brings into play a 1-2 up 2 down reversal, where you get a failed 2 up, and the next day, if price action, or the next week, if price action goes below the low of this 2, you can expect it to go to the low of the candle to the left of the 1. So that would be, in this case, again, to the top of this gap. We would be testing the top of the gap, bringing back into play seriously again this monthly downtrend line, probably filling the gap at that point. You never know, we could bounce off of it again, give some type of double bottom here, continue to basically make a flag after this move up. That's all of that is a possibility, but the longer we stay in this failed 2 up position, even if price continues to push down and we close down here at the end of the week, that's giving, leaning more and more towards a bearish week next week with a 2 down and making this reversal strat. So we want to keep that in mind. Today's price action, was a gap up, so it kind of takes the normal rules out of play. And I guess this is the time that we can talk about it a little bit more, because I guess we don't talk about it too much. But we had the high of day. Let's bring up the scalp chart, so we have the day, those marked out. So this was Friday's high. And not only did we open above it, we opened above and pushed up, right? So normally calls, we're looking at calls with higher lows above the opening print, targeting either previous high a day, overnight high, or like some 4-hour trigger to the upside. In this case, when we gapped up, we opened up above all of them, right? So here's the 4-hour trigger to the upside here at 25.78. You can see it labeled here. Previous high day at 25.38, and the overnight high was down here at 25.98. Did I not? I don't think I updated that. Let's bring that into play. I have a different chart that I trade throughout the day, so that's why this one's probably not updated. Oops. Can we get the overnight high? Yeah, the overnight high was up here. I knew it was above the opening print, so let's get this labeled right. Where are we at? There it is. So let's take the after hours off of here. Okay, but we can see we opened up above these levels and then pushed up past overnight high. So there was no target to shoot for within the rules of the 4-hour markers that we use, that we set up our notes for on the 4-hour in day perspective, in the 4-hour perspective. So we had to look then to our triggers and targets on the day. So if we go back to our notes, we obviously went up past 25.83. 25.83 then triggers the 2-1-2 up to the upside, right? 25.83 was the trigger. The magnitude was 25.88, but that triggers the 2 up on the week, but you can see how high up the magnitude is on this. So we want to look for something a little bit closer to the magnitude of the 25.88 in the current price action that we were at, which was up around here 26.60, 26.70, right? So our next targets, our extended targets on the day were 26.04 and 26.74, and what do you know, we get up to 26.89, right? So just above our second extended target. Our second extended target was right here, and that we got the higher high at that point, came down, made a higher low, right? Came down here. This 2 up locks in this as being a higher low, higher than this low here, and then it started to move sideways, right? It didn't know, there was a fight between the bears and the bulls, right? Nobody had taken further control. We weren't pushing back to the upside. We weren't pushing to the downside. At this point, you can do little things like pull out Fibonacci, which is what we did, and you can go from the low of the last 5-minute candle in Friday's action to the high of today, right? At least at that point, what was the high of the day? And that gives you this 38.2 fib at 2642, and that's ultimately what we came down to and found support at multiple times before finally breaking, and then that's kind of when the floodgates opened up, right? So you can do little things like that to try and figure out why something may be, holding station at a certain level if you don't have another level marked out, right? We can bring out some fibs. There's nothing there that we have on that. What if we bring out our major fibs from like the 2020 run up? Nothing there. Major fibs from the 2024 run up, 2601. So yeah, still nothing there major. So that's when you gotta kind of pull out your bag of tricks and like the Fibonacci's. But even if you didn't, we did as you saw in X, when we got the lower high and this triggered 2 down. Before we knew it was going to make a lower high, we went ahead and sold a bunch of the swings that we had for August 15th. They were in some pretty good profit, so we went ahead and took those. We don't like holding contracts, much past like Monday, maybe Tuesday on the week of those contracts expiring. So definitely wanted to get rid of those, and they were in profit. We bought at the bottom of the zone, which was 24. If you remember me talking about the zone from 24 to 28 that we've been bouncing back and forth between for about 5 weeks now. So we did buy the calls in the 24 zone. Had a little bit of theta decay, but we bought at the money, and had enough time that our theta was pretty small. So the gains far outweighed the theta burn. It wasn't anything that we had to even think about. We sold, took that profit. We did, once we saw this higher low was set here, we did jump in a couple of calls for next Friday just as some scalps in case there was further push to the upside. But once we got lower than this low, we stopped out and looked for the lower high here just to see if a downtrend was going to get started. So it did, once we got this lower high, I think it was on the 15, we entered, 15, once we got this lower high, we entered puts. When it went 2 down here, we were able to put our stop just above here. Let me just make this bigger so everybody can see it. So once we got this lower high here, this set up the 3, 2 up, 2 down, one of my favorite reversal patterns in the strat world. It gives you very clear entry right here and an exit right here if that's what you're going for. But I was just looking for it to make it to here to continue this downtrend, right? And the put was for next week, and that gave us time and allowed it to pull back some. We set our stops above the lower high here, just in case this did not make the lower low right here and then came back up and made a higher high. We go ahead and stop out, minimal loss, no worry there. But we were the price action was able to make a lower high here, and we were able to ride them down. We exited half of our puts at opening print. Then we saw the lower high on the 15. We remained in those contracts. We exited further puts. What was the? I think we must have been looking at another chart. Let me bring this up real quick. No, it was just this 4 hour trigger to the downside, right? So the initial, if you look back at our notes, the 4 hour trigger to the downside was 25.46. So that was still out here. Oops. The reason why we leave that out there is because it's still a point of control essentially, right? There was it was a significant point in price action, right? It was the low of the last 4 hour candle of yesterday. So that's where price stopped its pushed down, right, before it pushed back up. So it still is a significant level, and we sold the rest of our puts at that level. Again, follow us on X, and you'll see our real-time entries and exits. We did buy some puts for September and November just to swing. We've got CPI tomorrow. There was MU earnings after hours today. They reported pretty well, so I think they're up. Let me look. They are up 4% in after hours, so SOXL is up 0.3% in after hours. But again, those were not. I'm not swinging for tomorrow. I wasn't looking to sell those tomorrow. Those expire the September monthly expiration and November expiration. So looking to swing those in case we do start this further downtrend. Didn't load up very much on contracts of either of those to kind of keep the entry cost low right now. But we'll definitely scale in if we start getting like lower highs on the day chart, especially if we get a lower high and a lower low. That would probably convert the failed 2-up that we're in right now on the week into a true failed 2-up when it closes at the end of the week, and put us in position to be making a lower high on the week perspective. So there is a chance that we turn to the downside here. I'm just kind of protecting the I don't actually we don't have any more November calls. We rolled those to January 27 calls when we were pumping in that 7th week of the 7 green week streak that we had there. But yeah, we've got some September calls. We do have September calls, so those September and November puts will definitely be good hedges against those. If we do get a lower high on the day, I'll probably be looking to sell some calls again, and then of course scale into the puts. We do have this gap down here, which we bounced off previously. If we come down again, I'm not confident that we won't fall through it. Even if we don't fall all the way through it, and bounce off of the quarter, this gap is still a magnet for price action. So we want to keep the downside in mind. It doesn't necessarily mean that we're going to go to the downside. If we look at the 4-hour, and let's bring up a more clear chart. If we look at the 4-hour, if we push up tomorrow and lock this in as a higher low, there goes the downside thesis out the window, right? So we just want to be ready for both sides of price action. Again, very low price entry costs on the puts that I did get. They're far enough out that the theta is basically nothing at this point in time. So again, protecting the calls that we have for September. Calls are still in play because, again, this could be a higher low. If we look at it again from the day perspective, there's still plenty of room to come down. Even if we fill the gap, if we bounce off the bottom of the gap, right? If we come down here and bounce off the bottom of this gap, it's still and then go back up, that's a higher low there. So we're still in an uptrend from that perspective, right? So we've still got, from a longer term perspective, more of a neutral stance, but still, kind of leaning bullish because we haven't gone full lower high on the week or even lower low, right? So right now, this is locked in as a lower high, right? Because this 2-up went up. We feel more confident if this 2-up gets above the high of this week, and really lock that in as a higher low. But right now we're in the middle of this range, this 25 to 24 range, that the year flip and the quarter flip have us in, like basically right in the middle, 26. So again, it can go either way. Wish I could tell you go long, or wish I could tell you buy puts. Again, any of those would be your choice, but I'm just trying to lay out what the price action is for SOXL. So no more about the current and past price action. We see how we are set up from a day and week perspective. The month, I guess we can zoom out real quick just for the month. And look, we're still a failed 2 down, right? It did go 2 down, but price action is back above where price action opened for the month. So it's a failed 2 down, it's green. So this could also be a higher low on the month perspective if we just continue to push up. So keeping all that in perspective, let's go ahead and set up our triggers and targets. To do that, we've got to make our 4-hour markers. Again, if you're not familiar with this, check out the description of the video where we have a link to our other video about setting precision levels or setting levels for precision trading, and check that video out as well. So, but for right now, hang with us. We're going to set our triggers and targets, and then we'll let you go and enjoy the rest of your night. Don't want to make this video too long. Again, we got CPI tomorrow. So, the notes that we put in here tonight could be out the window depending on if there's a huge reaction to the market, as far as like the 4-hour triggers and targets, but it's going to trigger something on the day, possibly continue something on the week, or even flip us to a 3 if it's that bad, right? So I'm going to go ahead and underline the 2 green, 1, 2 up on the week, because that did trigger even though we pulled back. If it triggered and didn't pull back, if we were still above the trigger, the 2588, I would have made this bold as well, but we're not in force on any of our strats right now on any of the time frames, right? The month triggered to the downside, but it's back above the trigger. The quarter triggered to the upside, but it's back below the trigger. The year triggered to the downside, but it's back up above the trigger. So that's why, again, we got kind of a neutral stance right now. All the time frames are conflicting. But let's go ahead and get our notes prepared, right? So tomorrow will be the August 12th. These notes will be from today, the 11th. Tomorrow will be 96 days left in the trading session. I'm sorry, in the trading year. The price closed at 25.61, so 10 cents lower than what we closed at on Friday. This opening, the week flip is 26.03. Let's go ahead and change this to the week of 8.15. Change that to our red color so we know that it's a flip, right? So we got that there. 26.03 is when we go green. So we go green at 26.03, right? So we know the week flips green at 26.03. The year flips red at 23.57. The quarter flips red at 24.38, and the year flips green at 28.13. So again, conflicting time frames, meaning we're having this sideways action. We have our expected move for the week at $2.26, marking the high, well, at least the market maker's expected move, right? 226, making the high of the move at 27.97 and the low at 23.45. Again, we're at 25.61, basically in smack in the middle of that. So nothing to really to say there. We're not at any of the edges yet, so we don't need to look for any bounces or rejections. We know what our gaps are above here. We've got our gaps below listed here. So let's go ahead and get our triggers and targets filled in for the 4-hour. Let's mark the downside first. If we trigger to the downside tomorrow, the 4-hour actually triggered a 1, 2 up, 2 down, which means the magnitude is the low of the candle to the left of the 1, meaning the low of this candle, which is 24.90. We've already got that filled in there. Because that was going to be the 2, 1, 2 down, but this ended up being a 2 up, 2 down. Oops. Right? One of my favorite strats. Gives you a very clear entry and exit with the 1, 2 up, 2 down. Again, you enter at the low of this candle, and your magnitude or your target is the low of the candle to the left of the 1, right? So 24.90 is our magnitude. We've already got that in there. We've got our extended targets in there still. Again, today just closed 10 cents below what it closed on Friday. So a lot of these triggers and targets will remain the same. If you watch the weekend video and don't update them, you can probably still feel confident in them, but I'd suggest that you update them. Anyways, let's go ahead and look to the upside. This would be a 2 down, 2 up, triggering at the high of this candle with the magnitude of the high of this candle. Actually, we need to move our markers, right? So here's our previous high a day, move it to today's high a day. Oops, cancel. Activate. We'll take the 4-hour trigger to the upside, move it to the high of the second 4-hour candle of today. Same with the 4-hour trigger to the downside. We move it to the low of the second 4-hour candle of today. And the previous low a day now moves to today's low a day, right? So getting back to the 4-hour reversal, right? This would be a 2 down, 2 up, triggering at 26.30 with the magnitude of 26.89. So 26.30 and 26.89. 26.30, 26.89, right? So now we can have our extended targets. Right, these are no longer there. We're past those. We had that was there. So the close of this candle is going to be a significant point for price action. So the close here is 20. The point close here is 2764. 2764, and we'll mark one more extended target, which would be, so the week's extended, the expected move for the week, the top of that is here at 2797. The year flip is right there above it at 2813. It's been rejection point for multiple days in the past, so we'll use 2813 as our second extended target, right? So we can take 2568 off as a higher high because we blew that out, right? We made that. So the next higher high is this 2813 up here. Again, higher highs tend to act as magnets as well. Tend to either go to them and continue, or find these and make these reversal points. So just a reminder, as we move to the daily triggers and targets, if there's a strat on the 4-hour, usually the magnitude for that strat is a strat reversal. I'm sorry, if there's a strat reversal on the 4-hour, the magnitude of that strat is generally the trigger for the daily strat. So in both cases, there's a reversal. This one a 3, 2 up, 2 down. This one a 2 up, 1, 2 up. That magnitude is let's see here, going to be the trigger for the day. So let's go ahead and map out the day. So to the downside, this would be a 1, 2 up, 2 down. Trigger being the low of the day, which is 2546. Oh, we had a 1, 2 up, 2 down. It wasn't just a 2 up, 2 down. Okay, my apologies. So because this 2 down was the low of the day, that's going to be the trigger for the day. So if this was a 2 up, 2 down, then we would have a different story. But so the trigger is going to be this 2546 on the day, right? Let's go ahead and look at the day chart. 2546 right here is the low of this candle, which would make a 1, 2 up, 2 down if it goes below this price. The magnitude being, again, the low of the candle to the left of the 1. This is on the PDF that's in the description as well. It's a free PDF, so I'm not charging anything. So the low of the candle to the left of the 1 is 2453. And we've got that in there already. Again, because we moved 10 cents overall today, a lot of these triggers and targets are going to be the same. So our magnitude is fine on the day. We'll leave our extended targets as well out there. To the upside, this would be a 2 up, 2 up continuation. So it's not a reversal. So it does have a clear entry, but it doesn't have a clear exit from a strat perspective. As far as like, 1, 2 up, 2 down, you go to the bottom of the candle to the left of the 1, right? But for this, you're going to have to use your extended targets and things that you draw from other horizontal levels. So a 2 up, 2 up triggers at 2689, right? We got 2689 in there already. This must have been 2688. No, that doesn't make sense either. Somebody tell me about our notes from last night. Why was that? Why was that messed up, right? If you watched the weekend video. But anyways, our targets would be the ones that we had, the extended targets that we had over here, starting with 764, right? 2813. Oops, why did I do that? Got to pay attention sometimes. That's a magnitude. We don't have a reversal, so there's not a magnitude, just a trigger and targets. Right, so there's our targets. 2813 is the flip, and we don't really have anything above that to the left of us that's within real reach. I guess we could go with the high of this candle, 2926. 26, right? So it was a point where price stopped going up, right? So we can still use that as an extended target. That's still part of the strat. Especially when you have a continuation, which is what we have here. We don't have a reversal, it's just a continuation. So we have our triggers and targets. for the 4 hour and the day filled in. The week doesn't move. The week doesn't move. The month doesn't move. The quarter doesn't move. The year doesn't move because we're not, making a new month or a new quarter or a new year, right? We just made a new week. That's why we changed those over the weekend video. But because we're not making them a new week tomorrow, they stay. So we've got our new triggers and targets for the downside and the upside on the 4 hour, to the downside and the upside on the day, and then everything else is still in play for the week and up, right? So again, be prepared for any downside movement tomorrow. CPI is going to throw a real wrench into things because if the market has a violent reaction to whatever the report gives us, it blows through the 4 hour triggers automatically. It could blow through the day triggers and targets as well. So we've got the week triggers and targets out there. The week could go 3, for all we know, but it could also just take off, and we could flip back the year green, bringing up everything back green, right? We're above the month and the quarter, so you can see is from the time frame continuity here at the upper left hand part of the chart, we've got the month and the quarter green, but the week and the year, if we can flip those green, then we can be kind of off to the races, and that at the very least testing out this weekly broadening formation, right? So keep that in mind. Let's just real quick before we go, we'll take a look at the internals for today, the QQQ internals, right? And they kind of tell the story just like price action. We can see volume. Volume was money was flowing in the morning, right? And you can see that and kind of in the price action here. Along with that, breadth opened positive, right? And that's so money flowing in and breadth being positive reflects an upward movement, right? In the actual stock. This is SOXL up here. But then we started getting the sideways action here, slightly moving down. The tick, it remained around the zero line for most of the day until we got that big push. But the big push in the tick didn't really result in that big of a push on the overall the underlying stock price. Yes, it had a kind of a big push. This is a 5-minute chart, so it looks kind of big, but it didn't make any higher high on the 15-minute or lock in a lower high on the hour or anything like that. So when you see the big push here up in the trend higher zone and then it get immediately rejected, we're probably not going to trend higher. And you can see how it fell back below zero line at that point and then stayed below zero line. And that's when we started getting the downward trend. The breadth, fell off. That's kind of here, and it played around the zero line. That's where we went sideways. We got that last gasp attempt. They breadth tried to get positive again, and you see that little push up here. But then when it broke and went below zero line, that's when the price really drove down. So again, this is not, you don't want to use just the internals to make the choices on your trades, right? You want to use your levels that we have out there. And again, I guess I can kind of go over. We didn't do it in the video early on, but if we look at the, let's go here, and if we look at the price movement on like the 5-minute time frame, you can see how it respected. This was the opening print. Overnight high was here, but once we got down to opening print, you could see it tried to battle here. Once it got to overnight high, it tried to battle here. Once it got to previous high, or overnight, I'm sorry, this is previous high day. Once it got to overnight high, that's where it actually found its, final bounce point for the day. It didn't push any further. I thought we were going to get down and test the weekly, or the last week's 50%, which we basically did, but we'll see if those two hold strong. But you can see how the price is kind of magnet to those, and that's what it makes its decision on. So stay true to the method. Just continue repeating it every day, and you'll see how all of this plays out exactly how you don't predict where it's going to go, but you watch how it respects the levels that you have out there, and if you play it accordingly, right? So once it hits a certain level and reacts a certain way, we're ready to get in either way based off of our rules, right? And then you use a series of like higher highs and lower lows and things of that nature to gauge whether you're going to stay in the play or not. You continue to look at multiple time frames. Is a strat reversal here going to turn into domino effect? Is it going to turn from a 15-minute strat reversal into a 1 hour strat reversal and then into a 4 hour strat reversal? Are you in the direction that those strat reversals would domino, right? If you're not, then you need to make sure that you've got your stops set and you stick to them. Taking a small loss is not really a loss in my eyes, right? Like, you just either had an early entry or a late entry, right? But the point is to make sure that loss is small, and then make sure you readjust, recalibrate, make sure you're reading your chart right, and then enter again, and then that win that you're getting, just make sure that you get that full win, but and protect your profits. That way, any small loss you have are outweighed by the wins, and with consistency and a decent winning percentage, you make some pretty good money. So if you like today's video, make sure to give it a like. Help this video spread. Again, I believe SOXL is one of the most like economical plays that you can make, right? For the premium, how low it is. Basically, you get a real high delta to a real low theta ratio, and the beta on the underlying stock is high, so you're going to get big movements. It's a triple leveraged ETF, so you're going to get big movements. So it's the best way to put in minimal money to stand to make a large gain. So I just want to spread that word to as many people as possible, and then also at the same time try and help anybody who's trying to better understand reading charts and price action with the method that I have. I don't expect everyone to like it or want to pick it up, but I think that it can help for a lot of people. It really uses just simple, the most simplistic way of breaking down price action to understand it, right? We don't need a bunch of complicated indicators and things like that to have a winning and a successful system to make money. Like I said, you can make money every day with this, but it really comes into play with the mid and long-term swing trades. That's where you can make real good money. Knowing where to enter and where to exit. It's not only good for buying one-legged options, right? You can buy credit spreads, or if you've got shares, you can sell calls, or if you want shares, you can sell puts, right? There's many ways to attack this if you know where things are have the highest probability of reversing, and then knowing if they do, where you need to get in and where you need to get out, right? So that's the name of the game. And again, I hope you enjoyed today's video. Please give it a thumbs up. Again, if you're not subscribed, subscribe and hit that notification bell so you know when the videos are dropped. Hope everyone has a great rest of their night. Hope they have good rest, and good luck in tomorrow's trading.